This IPO is going to create one of the largest listed internet companies in the world. Already in the top 10 list by market cap, there are two Chinese companies. There's Baidu and Tencent, alongside Facebook, Amazon, eBay, Google. So the addition of Alibaba into this list of the top 10 makes the internet almost a kind of China-US joint venture, or a duopoly. And it's also going to change the way that Chinese companies are viewed in the US. It's going to open the door to more listings of more Chinese companies. There's already about 200 Chinese companies listed in the US, but this is going to open the gate to more of those listings. More Chinese companies are going to see the US as a friendly market, a place to go to raise capital. Well, this IPO is hugely popular, I mean, by all accounts. They've already had to raise the price to accommodate demand. What people love about Alibaba is just the story. It rationalizes shopping in China. And what that means is that it's at the confluence of three huge trends right now. First of all, you've got the China growth trend. I mean, China is the one country in the world that's really growing. There's the switch from an investment-driven economy to a consumption-driven economy that's going to be happening in China over the next decade or two. And then there's also the growth of the internet in China, where less than half of the population is actually on the internet, compared with, in the US and in Western Europe and most developed markets, the internet's not going to grow that much more. And in China, the internet is still growing in huge rate. So, I mean, you're going to have more internet users in China, you're going to have more shoppers in China, and you're going to have richer shoppers in China. And that's what people love about Alibaba. It's at the center of this kind of convergence of these three great trends. I mean, Alibaba's a new company. They've been publishing accounts for several years now. There's some question about whether the numbers actually live up to the story that they tell. There's, if we take some of the numbers, there's some question marks. The gross merchandise value, about $250 billion last year. That's the amount of merchandise traded on Alibaba last year. That's a 63% growth from the year before, from 2012. During the same period, there's a study of listed retailers in China that showed that they grew about 6%. Their online sales actually grew at less than that offline rate. So there's a question about exactly where the huge growth at Alibaba came from. There's also some questions about the overall numbers of e-commerce in China. China itself has a GDP of just over half that of the US. China's consumption as a percentage of GDP is actually less than half the rate of the US. But at the same time, the e-commerce industry in China is estimated at larger than the e-commerce industry in the US, at about $300 billion. So there's a little bit of a question like, where did that number come from? But nobody can deny that this IPO is going to be the big event for world capital markets this year. It's going to be probably the biggest internet IPO ever. It might even be the biggest IPO ever, full stop. And everybody's going to be talking about this for the next 12 months at least. I'm Charles Clover, Financial Times in Beijing.